what you can do if you don't have kids.
Hello, how are you today? Excellent. How are you? She goes, wow. Good evening, everyone. I'd like to welcome you tonight to a special presentation and a special guest. And we have Supervisor Rutherford here to introduce our guest.
Well, thank you. Thanks to everyone for coming out tonight. It is my pleasure to introduce to you someone I know you are eager to have a public conversation with, and I think you'll be eager for the news that he has to share with us this evening. Commissioner Ricardo Lara is a former state legislator, both Senate and Assembly, and a former legislative staffer for a legislator who served our area. So he knows San Bernardino County very, very well. He has a BA in journalism with a BA in journalism and Spanish, and a minor in Chicano Studies from San Diego State University, so he knows and loves Southern California and is now serving the entire state as our State Insurance Commissioner. Would you please join me in welcoming Commissioner Ricardo Lara?
Thank you. Thank you, supervisors, and it's great to be back in San Bernardino County. This is where I actually began my career in politics. I was a field rep for former Senator Nel Soto. And so it's always good to be back in the 909, the Inland Empire. So what I think what I'll do, I wanted to share with you what essentially has been several months now of touring different communities that have been ravaged by wildfire and working with the different communities and stakeholders to really come up with some long-term solutions of what we want to see changed in the law, what we have been doing thus far to try not only to protect communities from future fires, but also coming up with some long-term solutions that are really, we think, are going to be helpful as we continue to combat this issue of non-renewals from the insurance companies that you all have been at the forefront of and were some of the first communities to feel what so many Californians are now having to deal with in terms of non-renewals of your insurance, which we essentially know that if you can't find insurance for your home, you can't sell your home, which means it devalues in property the value, which means less resources to actually fight the fires in these communities. So we know it has a trickle-down effect. And is the presentation up? Okay. I was like, I was trying to stall to have it.
I'll stall for you one I forgot to introduce. Also up here at the dais with us is Mayor Rick Herrick of Big Bear City.
Yes.
City of Big Bear, sorry. Big Bear Lake.
So what I think I would do is I'll go through the presentation. I also have Tony Signorelli, my deputy commissioner, Joe Lauscher, who's my special counsel, who are veterans of the department and have been with me at all these town halls to help me answer some questions you might have. But I'll go through the presentation now and give you some of the key facts and data that we've have been seeing as we've pretty much traveled the entire state, talking to communities and talking to leaders about this ongoing issue. So in San Bernardino County, the insurance these are some of the trends that we've been seeing that more or less correlate with the rest of the counties that have been suffering and have these high wildfire risk communities. We've seen a 6% increase in CAL FIRE state responsibility areas, and we know that more are expected with the 2019 fires. We've also seen a growth of 39% in the increase in new and renewed policies by the FAIR Plan, and we know that FAIR Plan is the insurer of last resort in San Bernardino County. And I'll tell you, our department has seen an increase of more than 100 rate increase files by insurance companies statewide in 2017, 2018. That doesn't again account for the future filings of insurance companies for wanting a rate adjustment for the 2019 year. So we've seen, and what are driving this cost, right? What is driving this increase, and what is driving these issues of non-renewals? Well, we've had 10 of the 20 most destructive wildfires in California history. They've occurred in the last 4 years. As risk increases, we know that the cost of insurance increases and the availability of coverage decreases. Those go hand in hand. And again, I know many of you already know this information, but we'd like to reiterate a lot of these points. Insurers consider the very recent past to underwrite and determine the rates for the following year, which we've known to date, the insurance industry has reported a loss of $25 billion in losses in 2017, 2018 alone. So that is the perfect storm of what's happening throughout the state and how it's impacting specifically San Bernardino County. So residential underwriting has also changed, and many of you have experienced this already. We know that insurers traditionally would look at your individual parcel, your individual property. They would come in and assess and see if you had, have done the appropriate home hardening, if you had the defensible space. Now, it has completely changed. Before you even get to your property, now you have to get sifted through some satellite imagery that really, in my opinion, doesn't really tell the story of what's happening at the granular level. So now they just look, before you even get to that point, homes must first pass through this evaluation filter that only looks at slope, fuel load, and type of fuel and access. So, in my opinion, doesn't really give you the full picture of what communities have done and what homeowners have done to harden their home and to protect their properties. So this is unfortunately what is happening. We have some ideas of how we can try to get that information and make that more transparent as we move forward as part of our solution. So this slide number 5 is pretty much really important because it tells you and it encapsulates the findings of what we have been noticing. So we know that non-renewals are completely unfair, especially if there's no consideration for the individual's tenure or claims history. Many of our neighbors have had the same company for 30 plus years and have never had a claim, and they still get dropped, right? We've also heard that there's no consideration for pre-fire mitigation or home or fire hardening. Many of our neighbors also say, the insurance company said I needed to do X, Y, and Z. I shelled out the $10,000 to do this, and I still got dropped, right? And then even if you had no change in your individual risk whatsoever, people are still getting dropped. And so we know that the non-renewal is completely unfair in the way it's being done. And we also know that there's no clear statewide standards for fire restraint structures or mitigation of your property. We know that there's county programs, there's federal programs, and there's state programs, but it's kind of a hodgepodge of different programs. We want some statewide standards that are very clear on what is going to keep communities safe. And we need the insurance company and our first responders to be engaged in that process so that we all know as a state what are some basic guidelines of community mitigation standards. We feel that, in particular to the community mitigation standards, it helps us be proactive. And so if we then say as a community, these are, as a community, what we need to do. We look at our individual communities, look at our ingress, egress, our fire stations, the amount of water storage we have, all these things that are important, but at a community level, that we start looking at what that's going to look like as opposed to just parcel by parcel by parcel. Because we know that in many cases too, you might have done everything, spent the money to mitigate your property, your neighbor might have not. Or maybe it's a second property for somebody who doesn't live there. So we want some community-wide mitigation standards. We feel this is a way we could be proactive, lessen the risk, and try to bring the insurance market back into these communities. And we also know that the FAIR Plan is insufficient coverage. And we know that the new reality, unfortunately, is that the FAIR Plan is the only option for so many of our neighbors. I always bring up the story, I forget what county we were, I think it was Tuolumne or Sierra County, where we asked the people, well, have you shopped around? Have you found insurance coverage? The gentleman laughed in my face and said, nobody would call us back. The FAIR Plan is the only option for us. It's the only permanent option that we have. And that is the reality, whether we like it or not. This is the reality. And so we feel that we need to do something about the FAIR Plan. It needs to become a comprehensive HO3 policy so that then consumers don't have to buy the wraparound insurance, which only adds to the cost. So my argument is, as an insurance company, you can't have it both ways. You can't send somebody the FAIR Plan knowing that it's limited in scope and then offer them the additional coverage for what you are willing to take the risk. It's not fair. So we want the FAIR Plan to be a full, comprehensive coverage, and we have a plan for that. We've also talked to so many neighbors, over 2,000 people throughout multiple community town halls that we've had. Many people are on fixed incomes. They purchased their home long before all these issues started happening with climate change, with the severe weather, and a lot of folks are, quite frankly, being pushed out of the urban core into these communities. And that is a reality. We're not talking about Tahoe ski chalets and million-dollar homes. This is a very mixed community, mixed income, and who face different realities. So these are different laws that passed this year in the legislature. Before the law when I was in the Senate that I created, which has created this moratorium now that gives communities some breathing room, was SB 824, which gave non-renewal protection for all homes in a declared disaster area. And we'll talk a little bit more about that. We've seen the legislature try to also guarantee that not to guarantee renewals following total losses. Again, 2 guaranteed renewals so that we give people more time to make the appropriate decision for them and their families about how we're going to move forward. We're starting to look at, the legislature is now starting to look at what are some statewide level funds that we can look at to incentivize people to start hardening their home. Because we know that costs a lot of money. And we know that many of you have already invested thousands of dollars, but there's still so many people on fixed incomes, our seniors, people with disabilities who can't do the upgrades themselves. How do we help them and incentivize them to do the right thing? And that's where we're starting to think about a tax credit, we're thinking about a loan forgiveness program, and we're thinking about subsidies for our disabled community, our veterans that may be on fixed incomes and don't have the money to harden their home, but are living in these sensitive communities. Again, we're looking at what state level, again, for the home hardening. We are looking at what a model for a defensible space requirements will look like, increasing the oversight for out-of-state adjusters. That was another big issue that we were seeing. Out-of-state adjusters did not know what our laws are, what our consumer protections are. Senator Leyva here locally, we worked with her to improve the consumer disclosures for folks living in manufactured housing. That is a big issue for us. And one of the things that we continue to work on, Senator Daley agreed that we should increase the disclosure, the notice, give you advance notice. Right now you have 45 advance day notice when you're going to be non-renewed by your insurance company. We think that's insufficient. So the legislature agreed with us, increased it to 75 days. We want to get to a point where it gets to 180 days. We want to give you more time to make a decision and give you the appropriate time to make a decision of what's going to happen as opposed to 75 days. But it is an improvement. People have told us 45 days was nowhere near enough time to make a decision. So the governor, again, has agreed in the signature of Tom Daley's bill, said we're going to have to come up with additional solutions for this coming legislative year. And guess what? I have those solutions. And I'm going to show them to you exactly what we want to see done during this year. The action to freeze non-renewals, as you've heard recently, we have a mandatory for those communities that have been in a recent wildfire disaster because of my bill, SB 824. We have now over 1 million homes that are protected and have a 1-year moratorium. So if you have received a non-renewal notice and you're in one of the zip codes, the insurance company has to withdraw that non-renewal notice and provide you with coverage for the following year. And I'm happy to announce that as of today, or yet today, we got the zip codes for the Inland Empire communities. So San Bernardino, Big Bear, Arrowhead, Running Springs, Riverside, Rialto, Highland, Colton, Paris, Apple Valley, over 50 zip codes in San Bernardino County are now protected as of today. So that is a big win for us in our community. So our 2020 action plan, this is the legislative side. We are going to go to the legislature and ask for legislation that says that if you've hardened your home, if you've done everything to harden your home, the defensible space, the shutters, you name whatever we deem is going to be necessary, that if you do that to your property, then an insurance company has to write you a policy. They can no longer just abandon you. We're going to force them through state law to keep you covered. And we feel that is important. We feel it is a fair thing to do. We're not going to force insurance companies to cover everyone. We just want insurance companies to cover those homes that have done absolutely everything that we've asked them to do to keep their homes safe. We think that's a fair trade. We think that's a fair thing for them to do. So insurance for mitigated properties gives an incentive to make communities home safe. By their own admission, the insurance companies have said that mitigating your home, creating the defensible space, all that lessens your risk. What I don't want is for you all to invest thousands of dollars and then still get dropped. I want you to invest the money, and if you need the help from the state to receive that help and invest in your property, and then mandate that the insurance companies cover your home. That is the legislation we're going to seek in the coming year. The action plan for the FAIR Plan. We want the FAIR Plan to be a comprehensive coverage. We don't just want a fire-only plan. We want it to increase its coverage limits from 1.5 million to 3 million by April 2020. And we want to allow the FAIR Plan policyholders, which they're already working on these policies, I should say, in all fairness, to make sure they make monthly payments, and you can pay by credit card with no additional fees. We think it's the right thing to do. I mean, it's just modernizing the FAIR Plan. Those limits haven't been risen since the 70s. So we want the FAIR Plan to provide a full HO3 policy. We will look at making sure that they have the right increase in fees to be able to offer this service. And we want to work with them to make sure that they do this. You're going to hear that the FAIR Plan is meant to be only a temporary stopgap, but that is not the reality for so many of our neighbors. It is the permanent place where they're being sent, and it is not sufficient. And I'm asking that they provide a full coverage, because that is the new reality that we're living in. Another thing we want to get done in the coming year during the moratorium is these fire risk scores. These fire risk scores, we need greater transparency. You get assigned a risk score, you have no idea why, how, no opportunity for you to appeal that score, no opportunity for you to mitigate to lessen that score, and no ability for you to look at what was the methodology that you used to get to my score. Why is one neighbor 6 and the other neighbor 3, right? So
the same as you and me.
To open this black box and determine how these risk scores are being assessed, create a process so that by which you can appeal your score, and making it more transparent so that local community leaders actually know what is the methodology that's being used to assign these risk scores in these communities, which currently we have no idea how they're doing this. So those are the top 3 things we want to get done and work with the legislature to get done in the year that we have this moratorium in place. We feel these are 3 essential things that we've been hearing over and over again as we visited communities throughout the state of California, and would make a significant inroad in making sure not only that you keep your insurance coverage, that you understand the score that you are given and how you can mitigate and appeal that. And additionally, if the FAIR Plan is your only option, that it is going to be a comprehensive plan, and you don't have to keep buying additional wraparound coverage that just increases the cost of insurance for you and your community. This is, again, just a reminder, and as you've seen, just our strike team, this is something new that we've been doing since I got elected in January. I wanted to get the department out to the communities. We've been visiting counties throughout the entire state, bringing pretty much our staff out of LA, out of Sacramento, and having these conversations with our neighbors about the reality that is existing in these communities where we're having this difficulty in finding insurance, and having those dialogues that are critical if we're going to move forward. And so we created the strike team in August to come out and have these conversations, and hence why we're here today. I want to thank the supervisors for inviting me to be here. We have a consumer hotline. It's a 1-800 number, and I know 1-800 numbers gives people anxiety, as it does me, but we have live people Monday through Friday answering those calls, answering your questions, trying to help you through this process, and if you have a claim, opening a claim so that then we can come out and investigate. Response to disasters, we have our local assistance centers, which we've done, and what we will continue to do in response of after a fire. Many people don't understand that we have a law enforcement unit with the Department of Insurance, where we have agents and investigators that come out and investigate fraud in any type of insurance arena. But we have them available for you to talk to if you feel that you've been or your neighbor has been a victim of insurance fraud, and we will send out investigators to make sure that we work with you to see if it's actually a case that we can investigate in terms of fraud. And so I'll leave the number up there. I didn't want to just talk the entire town hall. I wanted to now see if we can maybe open it up for questions. And again, we'll have my staff here to aid in the questions. We have our staff with the microphone. But again, I want to thank you for taking time out of your busy schedule to being here. I hope the presentation was somewhat helpful, and we'll be glad to help answer your questions. Thank you again for being here.
Thank you, Commissioner. We appreciate your comments and your announcement tonight. We are grateful on behalf of our constituents for the moratorium. We think that'll give room to help solve this problem at the policy level. Thank you for acknowledging the weaknesses and limitations of the FAIR Plan. Yes. We would all like to see those resolved. I think what you outlined about requiring policies to be written where maintenance standards are kept is going to be important, because so many of our mountain residents are absolutely responsible in how they take care of their properties and how they mitigate fire risk, and that will go a long way as well. So I know many of them came tonight with statements and ideas that they want to share. Wanted to give my colleagues up here the chance to reflect or ask a question first, and then I've got some folks who've signed up to speak this evening.
Absolutely.
Supervisor?
Thank you for your presentation. On one of the points you talked about, if our residents can harden their homes to fire, that it would provide them the reprieve and that they would be then required to be insured.
Yes.
Is that just for 1 year, or is that
No, this would be
it's a continual
ongoing
renewal?
yes.
Okay, thank you very much.
There's a pilot project that's underway in Colorado, in Boulder, where neighbors are working with local government and working with their first responders and with the insurance companies, saying if they've done all the home hardening, they get a certification. That certification then is sent to the insurance company, and the insurance company writes them a policy.
Okay.
We're looking to do that statewide for folks living in our mountain communities and where we're seeing wildfire risk. We think if it can work in Colorado, it should work in California as well.
That's fantastic. Thank you.
Thank you.
Thank you so much for your comments. The season of fire, I know that it's basically year-round now, but the reality of the mountains is that once, I'll say November hits December, January, snow is on the ground, there doesn't seem to be a consideration for that period of time, which is greatly 6 months or more, where there really isn't a fire risk in the mountains. It seems like it's just kind of a blanket insurance policy item where it's just considered that it is high risk in that area, when in fact it's not that way all the time. I'm really glad to hear about home hardening. I think that makes complete sense for our communities, because we've had mitigating measures for the city of Big Bear Lake where we remove vegetation around homes, but further hardening I think makes total sense. And if there's a way to incorporate that into the insurance policy, I think that would be
Right, and this
incredible.
is why, Mayor, you're absolutely right about looking at a community like Big Bear Lake, working with the insurance industry and with first responders in terms of, okay, let's look at this entire community. What do we need community-wide, and what are those standards going to look like, so that then we give you an idea of what, in terms of your planning, your investments, just changes that need to happen, so that you lessen the risk of the community and hopefully keep the admitted market in these communities, as opposed to just doing it parcel by parcel. Creating a community-wide mitigation plan helps us be proactive, as opposed to just waiting for the next fire and then, again, fighting this issue that, continues to really, obviously I don't have to tell you, put people's lives at risk, and it's just such an unfortunate situation we're in.
Our first speaker questioner this evening is Michelle Wimmer with the Wimmer Insurance Agency.
I'd like to say thank you for this opportunity to come down and speak with us. For me, this has been about a 6-year battle. I am a 29-year mountain resident, and I'm also an insurance agent. I worked for an admitted carrier for the last 9 years and now run my own independent brokerage. And with all this crazy mayhem, it's caused us to do, 1,800 rewrites of people who have now lost policies, have been forced out of the market. Some people have left the mountain and are selling. Our market is kind of getting, very hairy. Fireline score was the focus of what I was talking about tonight, wanted to talk to you about this evening. And I'm glad to see, because my biggest thing was the how, when, why, where. Right. In 2015, my score doubled. It went from 6 to 12, and my insurance went from $1,300 a year to over $6,000 a year. Now, as an agent, I have a discount thing, but I've been dragging this ball and chain now going on 5 years. And these rates, people can't afford them, and there's nowhere to rebuttal them. Right. There is nowhere to talk to anybody and find out how, when, why, where this happened. I just came home one day, and now I'm a 12, but the cliffhanger is up above me on the downslope with 4 miles of brush. They're 2s, or not 2s, but they're 6s or 8s. So I'm glad to see that you're going to be addressing this because it's my major question. I do have a little bit of concern about where the FAIR Plan might be going. I mean, it's now an association of admitted carriers, but by making it a full carrier and not the policy of last resort, would this be leading into a more state mandated or socialized kind of insurance where pretty soon we're back in the same box again down the road?
Right. And I welcome you to join me in Sacramento and help me get this fire risk score policy done, because you're absolutely right. We've heard your story is one that we've heard throughout the entire state. When it comes to the FAIR Plan issue, we feel that for so many folks, it already is the only permanent solution. And what we want to do as a department, look, we will monitor. My job is to make sure we have a solvent market, that insurance companies have the resources they need, not only to do business in California, but that they have the resources to pay out the claims. We're going to do the same thing with the FAIR Plan, making sure that they thrive and that they're addressing the needs. But the reality that's happening now is that it is the only permanent solution for so many communities, and it's not a policy that is full coverage, and it just exacerbates the cost for folks. So, we're working with the FAIR Plan. We're going to come up, what I think, at the end of the day, with something that's going to be a fair policy, and that's going to be a little bit more comprehensive for consumers, because allowing them to, like I said, putting them in the FAIR Plan with no other option, and then the insurance company will come in and sell you the other risk, I don't think is fair. You can't have it both ways. Thank you for your comments.
Thank you, Michelle. Next is Rick Dinan with our Crest Forest Municipal Advisory Committee.
Hold that for me. Commissioner Laura, thanks for coming here and listening to our community's concerns and suggestions. I'm going to approach my comments a little bit differently. I know that you've heard from people throughout the state the comments about affordability and availability. And I know that you were given a white paper I hope you share that with your staff. It represents the input of the mountain community and adjacent communities. And I think there's some points in there that really haven't been considered. In my opinion, you said that the longer-term solution is the FAIR Plan, and I'm going to respectfully disagree. I think that the longer-term objective of the department should, in fact, be to restore the competitive voluntary market. I think to do that's going to entail, obviously, some time, but an intense discussion with insurers and challenging them to come up with products and programs to meet consumers' needs. Part of the problem is the products that they've offered. They've broadened them extensively, and some of them don't address the constraints of a particular area. And quite frankly, I think you ought to approach them as a brain trust. Right now, I appreciate they're looking like squirrels in a park, but the truth is there's some really intelligent people that if you got together and challenged them, I think they'd come up with some ideas that would be useful to the consumers and to the department. You know, we appreciate that the non-renewal stampede was in some part because some of the insurers were overexposed in those areas and they didn't want to be the last company standing. Having said that, I know and appreciate that there was a fear that historical loss trends are not valid anymore, right, or they don't know how to deal with them. And the FAIR Plan, while it's operated in large measure as it should, I think that it provided a way for them to offload risk quickly and in some cases unnecessarily. While the FAIR Plan did provide that shock absorber, I don't think it's a durable solution, which is why I emphasize a return over time of the voluntary marketplace. I've got concerns about the FAIR Plan's ability to respond to a major event. I have particularly logistically. I think it also exists as a disincentive for insurers to write in the voluntary market. Commissioner Laura, you've been provided this white paper, and I think it details how the mountain and adjacent communities have improved their fire response and prevention dramatically over the last 10 years. Those factors aren't considered by underwriters. And in fact, you know that there's a general trend for underwriters to be formula-driven rather than judgment-driven.
Right.
We ask that you and your staff consider how to make those factors understood, the ones in the white paper, and that you carefully consider programs and tactics that will strongly incentivize voluntary writing in our and in other areas of the state. I think that if your staff could craft something, some type of incentive programs that would give credit for the voluntary market writings in these areas, it would have to be pretty dramatic, frankly.
Right.
I think that would be a huge assistance. With respect to the scope of your authority, you have very good legal and legislative staff. I know you do. I'm confident emergency legislation could be drafted, introduced, and enacted by your former legislative colleagues if you need to. Commissioner Laura, I want to thank you for the work you and your staff have done in drafting some of these proposals. I urge you to consider more. I urge you to challenge that insurance industry strongly, and let's see what they can do.
Thank you.
I know we're in good hands. Thank you.
Thank you. I appreciate your points. And again, in referring to the FAIR Plan, it's one, obviously the ideal situation that we want to see is we want the admitted carriers back in these communities. We want that competition. And that is primarily, that is our goal number one. Unfortunately, that's not the reality for so many folks now. And so what we want is a FAIR Plan that's going to be able to address the needs for these communities right now. But where we, and why I keep going back to community-wide mitigation standards, because that is where we lessen the risk, it's our opinion, for the entire communities. So we could bring and invite back and hopefully incentivize the insurance companies to come back to these communities, because we're demonstrating that as a community, we are lessening the risk. And I know so many of you have already done this at the community level. We want the insurance companies to take that into account and to say, look, this is what we've agreed upon, right? So you can't tell a community what to do or a home what you need to do, but then not offer them a product. And we think that's unfair. This is why we want them to be mandated to do that. Your other thought in terms of incentives. Yes, absolutely we want to look at incentives and underwriting. We think that's an appropriate thing to look at. But we also want incentives, just like we've created for good driving discounts for folks. We want to figure out how we create incentives and discounts for consumers that have done the right thing in their home. And that this could be an incentive, some sort of percentage off their premium if they do the appropriate home hardening. We think that's acceptable as well. And look, I'll be honest, we're looking at these rate filings, and if they're justified actuarially, we're looking at them. But it is not the only solution, in my opinion, is not only just to raise these rates, but we have to get something for the consumers as well. And the consumers are hurting. And so we think we have to find that appropriate balance. And that's what we're trying to do. And so I thank you for your comments. I am going to look at that white paper. It'll be my Christmas reading, and I'll get it back to my staff so we can follow up with you on the bullets that you've mentioned. Thank you so much for your time and your points.
It's a pretty good Christmas present, Rick. All right, our next speaker is the Chief of the Big Bear Fire Department, John Willis. Jeff Willis. My sheet says John, but apparently it's Jeff. My apologies, sir.
Well, first I want to thank our elected officials for holding or hosting an event such as this. I think it's an important discussion, so I want to thank you all for this. I'd also like to thank you first for the steps that you've taken so far. I know dealing with the FAIR Plan and adding more comprehensive insurance is not an easy task, and some of the measures that are already taken for it, I think we've taken a good step. I think what I want to share is, and I don't know what the solution is, and you put an example up of old school versus new school. Yeah. We know that old school works.
Right.
It absolutely does work, and I, as a fire official, I know that you get properties that are compliant, as that picture, it works. The fire line score is greatly flawed in many, many areas. So I'm going to tell you from personal experience, I just want to tell you about my property. It's in the Big Bear community. There's not a weed or a tree anywhere on the property, not a single one. It's pretty much concrete and asphalt. The nearest house to me is 25 feet, and the reasons that were stated for my cancellation were vegetation, which are none, limited access, not true, 35-foot road, limited fire flow, it's one of the highest fire flow areas in our neighborhood, and in my particular case, I'm just not going to argue with an insurer. It's just that they don't want to be there to begin with, and so we moved on. And I got many, many examples in our community with that same score where you got one property right next door to each other that are rated differently. Why I think the fire line score, the new school, has got value. You can only rely on the new school so much until you get out and actually ground truth it. You got to go out and ground truth it, just like what we do on the fire line, and take a look at what you actually have. And then lastly, in my community particularly, I'll use the old school reference again. In the old school way, before the fire line score, when you got a cost increase, it was rare to get a policy cancellation, but it would be a cost increase if someone didn't want to insure you there anymore, right? And so $300 more, $400 more, and then the insurance will go out to the competitive market and you start shopping around for different carriers that could offer you the same coverage at a better price. And really in today's world, in the new school with the fire line score, it's really not shopping around as you indicated, and so it's more like being forced into a monopoly where you're at some place where it's like, I need to go somewhere, and whoever will accept me, I'll go there. The biggest impact for that are for those that are on fixed income. In our particular community, 50% of our population is senior age, also on fixed income. So in today's new school war, we're not looking at a 10% increase that's already difficult to manage. We're looking 50, 100, 200% increase. And so I would say, along with guaranteed renewals, I don't want to interfere with private enterprise or a company's decision to insure or not, but once insured, something that would allow for cost increases that are tied to something to make everybody stay competitive, and at least the people that are insured will have some kind of idea what next year might look like. So once again, thank you for your time, and thank you for the good work you're doing up there in Sacramento for us.
Thank you, Fire Chief.
Thank you, Chief. Next, Yvette Page.
Thank you. I'm Yvette. Thank you for coming. Thank you very much for speaking with us. And I am just a homeowner. I don't have a title. I'm just a hospice nurse. And one of the things that was in my head, and it's my understanding that each home is assigned a fire line score. The insurance companies use this score to establish our risk of fire. The insurance company all use the score to decide if they will take the risk to insure us. This company is ISO, and it's a private for-profit company. Just one company based out of New Jersey. Who oversees this company? How come there's only one company? Why can't there be more than one, two, three? Just like the credit reporting agencies, there's three. If we're going to buy a car, where the car dealer is going to put my name into this database and get 3 different scores from 3 different companies and decide if they want to sell me a car. That's my big question.
Okay. Do
And I know you touched bases on that, but yeah.
Absolutely. I'll have,
Thank you.
they've been quiet. Let's have them.
Well, it's a very good question, and Fireline is definitely the dominant market player in terms of fire risk scores, but there are other entities that create scores as well. CoreLogic is the next most common used one, but many companies also use their own proprietary model that they've created, or in the last 3 or 4 years, there are probably a half dozen additional modelers that have come forward, many of them with actually more detailed models of property location characteristics. It just happens that Verisk and ISO has been one of the longest term market information providers in the insurance industry, both for commercial and personal property. So they seem like they have the entire market, but they don't. And if you go to different carriers, you might find that you get a different score at carriers that use a different model. But I will say currently those two most dominant models are both creating a lot of dislocation with their scores. And so either way, whether it's CoreLogic or ISO, you really don't get the opportunity to question the score. And that is why the commissioner wants to move forward
That's why we're
with
asking
making
for
the
those changes.
transparency.
Yeah. Yeah, no. Thank you.
All right. Chief had a comment on that?
Yeah, sorry, I don't like go-backs any more than anybody else, but I meant to mention this, and then this reminded me. When you're looking at the Fireline score, one of the factors that are weighted very heavily is access. How do you get there? And when you're using new school or technology, a lot of the routes aren't even mapped to get anywhere in the neighborhood. So I would suggest that if you want to use that apartment, ask a firefighter. This property, how would you get that? They give you something about, well, we go down this dirt road, you go through this gate, you go by Mrs. Smith's house, and it's a piece of cake. It's not there. But when you're using technology without ground truthing it, and it's weighted so heavily, they're definitely not using the local knowledge of the local fire service, which I think would be tremendously valuable.
Absolutely. And that's part of our plan.
Right. Thank you. Brenda Meyer, California Association of Realtors.
Good evening. Thank you for being here. And a lot of what you've already presented just killed about half of what I was going to say. But my name is Brenda Meyer. I am a broker owner of a real estate company in Crestline, and I volunteer on the board of the local East Valley Association of Realtors, as well as the state association, California Association of Realtors. But tonight I'm here representing me as a business owner, my agents, and speaking on behalf of other agents that are so affected by this. We have been dealing with this in the mountains for 16 years, and we saw after the 2003 fire, the major carriers started to exit our area, and then 2007, they basically redlined us and wouldn't write in our mountains for new policies, and we were forced to advise our clients choice between a Cal Fair plan, which at the time you had to have 3 denials, and with an out-of-state insurer, which many of us know out-of-state insurers don't have the regulations and the protections of working within California, and we don't know if they're going to be here next year or be solvent if there's a problem. Many of these homeowners didn't realize when it came to that choice that the Cal Fair plan was an insufficient policy to have. And they didn't realize that until they actually filed a claim. When they filed the claim and found out that their tens of thousands of dollars in losses were not going to be covered, they were, needless to say, very upset and coming back to many of us. The alternative was, another plan if they could get it at a much higher rate. So it's understandable why they chose what they chose. wrap policies at the time when this first came about were not as prevalent. Many of us didn't understand them ourselves. The insurers that we work with did a very good job of explaining to the consumer what that meant, but ultimately the insurer chose the lesser plan because, as is current, our lenders during a new purchase process only require that plan. Nobody has realized that it's insufficient, and we have the potential for a very disastrous situation. As you spoke, a 30-year policy holder that got canceled, that was me last month. No claims, and my farmer's policy was gone. And like so many, they were just not renewing in our area at all. Still friends with my insurer, though. He's a good guy. We do see all the indications of a perfect storm brewing. Escrows are falling apart because lending officers underestimate the cost of insurance, and buyers find out they can't afford the home of their dreams because monthly insurance premiums throw them out of their approved monthly payment. Current homeowners on fixed incomes forced to sell, like you had mentioned, and looking outside of California for more affordable options. Affordability for first-time home buyers. Entering the housing market continues to be a challenge, but because of the limited availability and the added skyrocketing hazard insurance, property owners, they may have to wait longer to become a property owner. But the property owners with families, I believe, are greater at risk. The cost of their insurance expenses continues to rise faster than their wages. We have the potential of a decline in property values because of the rising insurance costs, or in the worst case, foreclosures, because a homeowner either can't get insurance or as required by their lender, or they can't keep up with the rising costs. I've spoken to the leadership both at the state and local level, and many of us are in the realtor community welcome the opportunity to work with you and our state and local agencies to both help find solutions like many of those that you prepared here, but also to help educate our community residents. It's going to take a village to get this message across and explain why. There's no easy answer. I do believe in a competitive market. I don't know what it's going to take to get some of those insurers back to be competitive within the state other than incentives. I don't have an easy answer for that either, but I know that there's enough smarter heads in this room and outside of this that we can figure something out. So thank you.
Thank you. Your story is exactly what we've been hearing across the state, and this is why, time and time again, people didn't know that they were in such limited coverage, why we are asking for the FAIR Plan to provide that comprehensive coverage for those communities that don't have any other option. And I have to just say and preface that there's several states in the country that their insurer of last resort offer comprehensive coverage. So we're not going at this alone. Other states do this as well. So thank you. And if you don't mind, if you have written testimony or notes, if I can have those, because and I'll have to tell you too that we met last week with some of the staff of the California Realtors Association. So I will be at your meeting in January, having a conversation with your overall board of directors, and then hopefully with the members when you all go up to Sacramento, because this is unraveling the real estate market. And again, if you can't sell your home, it devalues, means less resources for our local governments that are trying to provide the services to be able to aid in this issue. So thank you for your comments. Yes.
Our next speaker is Kevin Soames with the Running Spring Chamber of Commerce and Snow Valley Ski Resort.
Thank you, Commissioner, for being here tonight, and your staff for traveling down, and thank you to our county supervisors and our county staff for organizing this meeting tonight. I wanted to speak on behalf of my business of the Snow Valley, as well as our Running Springs Area Chamber of Commerce. I understand that most commercial policies aren't being affected yet, But in our case, in the ski industry, we are. I'm on this California Ski Industry Association Board of Directors, and we've heard some horror stories. One ski area that's much larger than Snow Valley up near Tahoe had a 300% increase in their premium for property this year, which is quite frankly unsustainable. A family-owned ski area like mine, we could not sustain that. We're insured for tens of millions of dollars for liability of a lot of work comp coverage, and we have about $21 million of property that we're insured for, and we do self-insure for about $4 million. There's a lot of capital put into equipment at ski areas. And coming from the chamber perspective, we're sort of like the anchor store in a shopping mall. We bring a lot of people to the mountain, and people stop for fuel and hospitality services, lodging, restaurants and such. But to have a impact on the ski industry is huge. Our broker today told me, I was talking to him about it, said, you know, the property market in California for ski areas is out of control. Our carrier we've had for decades now, the same carrier, and we use the same carrier for work comp property as well as liability. And for the first time in working with them for decades, they actually sent somebody out last year to inspect our property and decide, you know, if they really wanted to keep insuring us. And the comment was made from our insurance carrier. They had over $1 billion of exposure in the Paradise Fire alone. And they weren't sure if they would continue insuring us after this current policy year. Our policy just renewed December 1st of this year, just days ago. So we're concerned on a level of the ski industry of what's going to happen in the future. We're obviously a risky business, if you will, due to a lot of liability concerns and such as the nature of our business and outdoor business activities, skiing and snowboarding. But we're concerned about the future of it in the ski industry because there are really just a couple of insurance carriers who are willing to cover our industry. So I just wanted to comment on that on behalf of just my business, the local community that depends on us. We have over 400 employees and millions of dollars of payroll a year who are paid to local residents. So just wanted to comment on that on behalf of our Ski Industry Association as well. So thank you very much.
Thank you. Appreciate your comments. Just to follow up on that, you know, we are asking, we're going to go to the legislature to ask them to broaden the scope of my former bill to also cover businesses in the moratorium. We think it's critical, and we're starting to see, not just in your area, but we're starting to see farms being dropped. We're seeing a whole host of other businesses that are now meeting with us. We were just meeting with the Cotton Ginners Association, which they're getting dropped as well, and they're just around ag land. They're like, how are we, you know, a risk? So we're starting to see this affect major businesses that contribute to the economic success of the state. So we're going to be asking that the moratorium also include our businesses, and we're going to start working with a lot of our businesses so we can get your contact. And if you need immediate help, we'll be more than happy to have a staff talk to you about your individual situation for your family-owned business. But we are starting to see this exacerbate now towards businesses as well. Thank you.
Another realtor from Rim of the World Association of Realtors, Carol Banner.
Thank you, and thank you very much for this opportunity. We really appreciate it. I have to concur, of course, with my fellow realtor, Brenda. Many of the issues that she brought up concern not only her community of Crestline, but ours of Lake Arrowhead and the surrounding communities as well. We do know that home insurance companies are now insuring probably the most expensive real estate in the country. To build a home here in California costs a lot more than it does in other areas for all the reasons that we know and understand. And then to throw in the expensive insurance costs on top of that are really making home ownership prohibitive for many people. We all know there is a home ownership crisis in this state. Home ownership is really the backbone of any community. Renters are not invested in the community, such as, you know, as homeowners are. Kids in our schools, supporting our local businesses and so forth. So I think that it is imperative that we get a handle on this insurance issue. I've heard many good solutions here today, opportunities for solutions, I might say, and perhaps you know, a glimmer of hope that we can get back into that competitive insurance situation where homeowners can actually go out and shop and there is competition and a reason for prices to stay down. I think that would be certainly a right step. But we thank you again for being here and please, and knowing how important this is to California homeowners and how important homeownership is to California. Thank you.
Coming down the hill slightly to DeVore Heights, Noretta Baker.
Thank you for allowing me to be here. I'm here on behalf of some friends who were canceled. I actually was not canceled. And the concerns, and you've covered some of them, with the FAIR plan being inadequate, causing them to get the wraparound, and it ultimately being more expensive for them. So I appreciate that you're working on that. It's very important to, us lowly homeowners. It's very important to us. I was also a little concerned. I'm happy to see the legislation go through, but for the people that are already canceled, is it going to be retroactive to help them? Because my family member was canceled in October in Lake Arrowhead, and she was a 20-year policy holder with the company, so it was a question she wanted me to find out for her.
If you can get us her information, and we will make sure to follow up with her from the department and get her individual, because all the individual cases are a little different. But what I can guarantee is have somebody from my staff follow up with them, after.
Okay, I really appreciate that.
Absolutely.
And when we talk about the hardening of the properties and the defensible space, I just want to make sure that that is also applied to government properties, because I back up to the state and they're not very cooperative. So I even asked if I could clear their property and I wasn't allowed either. So it causes me a concern for my property, because when there's burns, it's just going to be right on top of me. So.
Absolutely, and one of the challenges, as you probably know, are the federal properties as well. So we have to, if we're going to ask you to do the right thing, of course the state has to comply and the federal government as well.
Thank you very much for allowing me to be here.
Thank you.
Thank you, Noretta. Next is Jordan Zarate. He is the newly elected president of the Rim of the World Unified School District Board and with the Running Springs Chamber of Commerce.
Thank you. Well, good evening. My name is Jordan Zarate, and although I hold titles such as Board President of the Rim of the World Unified School District, Board Member for the Running Springs Area Chamber of Commerce, and that of Local Business Owner, I'm here to represent our community and something a little less defined, our future. I stand before you a homeowner. The only reason I was able to purchase a home at the age of 22 is thanks to one of the last few refuges of affordable housing in Southern California, the San Bernardino Mountains. Achieving my dream of being a mountain homeowner was attainable through hard work found in Orange County, dedicated effort, and intensive saving. Still yet, purchasing a home would have been all but impossible anywhere else in Southern California. And although affordable housing is a different issue than what we're here to discuss, the rising cost of insurance has now become a larger contributing factor for preventing Californians from purchasing homes in the first place. In these instances, escrows are falling through because homeowners cannot find insurance and they back out, or the extreme cost of insurance puts would-be homebuyers over their debt-to-income ratios and the loan falls through. Without further intervention, one of the last places a young person like myself can purchase a home in Southern California might become out of reach. If we wish to encourage more home buying, we must work to reduce the barriers homebuyers face. The issue of obtaining and keeping affordable, reasonable fire insurance is one of those barriers. I just want to turn to our community for a moment and just say that those invited today represent just a fraction of the people that live in and work for our mountains. Each person here wears a multitude of hats, and they each invest hundreds of hours a year into our communities. I grew up in the Inland Empire, and I've lived in Orange County. I can tell you that I've never lived in an area that's invested more into its community than this one. Focusing on only fire mitigation tactics, preparation, and the capability of our response, here's just a sampling of what we do as a community. We have some of the best abatement enforcement in the state. Since we're all unincorporated, that doesn't mean that we don't operate on a local level. We have 2 municipal advisory councils. We have a government affairs committee. We have 2 fire safe councils. We have fire abatement and mitigation programs at the local, state, and federal levels. We have a school district with strong partnerships to local agencies and evacuation plans in place to transport students off the mountain in the event of an emergency. We have local fire departments and immensely proactive volunteer fire departments, County Fire, CAL FIRE, and the U.S. Forest Service. We have fire protection at every level of government, something that not all mountain areas can say. We have a Red Cross disaster relief plan and coordinator. We have community members that adopt fire hydrants, even though there's no official adopt a hydrant program. We even have a ham radio club with established partnerships to agencies across all varies of government prepared for disaster coordination. Again, ham radio. we are about as prepared as any mountain community can get. And I mentioned at the start that I represent something a little less defined, our future. We have an opportunity to define that future for the better. I hope we can continue working together to do so, perhaps by implementing some of what others have suggested tonight. Thank you for your time, and thank you for making the trip down, Commissioner Lara.
Thank you.
Thank you, Jordan. Very well said. The final person who signed up to speak this evening is Kent Hutchings from Lytle Creek.
Well, good evening. Thank you for being here. I wondered if I could get copies of the slides
Absolutely.
that you showed. I'd
We'll get you.
like
we'll get you
to
a copy.
print them out and give them to members of my community. I am a member of the Board of Trustees of the Lytle Creek Community Center, which has been in existence for more than 70 years. We're 8 miles, somewhere between 5 and 8 miles up inside the San Bernardino National Forest, which puts us in a rather unusual circumstance. There's only one paved road in and out, so access is limited. We are very community-oriented. The Rim of the World may think they have a good ham radio club. We have more than 30 members, and we're adding to that number every day. Every one of them is outfitted with a professional two-way radio. We have a repeater of commercial quality, and we're putting a second in, and so on. One of the things that strikes me, and a lot of people have hinted at this during the course of the evening, the late lamented Massachusetts Congressman Tip O'Neill, who was the Speaker of the House, was fond of saying all politics is local. And in the case of Lytle Creek, that is particularly so, and we have a certain grievance that we think is related directly to this problem of fires, which is that we used to have a volunteer fire department. The volunteer fire department was closed, in essence, by the actions of the county. When I and my wife first moved to Lytle Creek a bit more than 4 years ago, it was still in operation. It is no longer. The building was built by and is owned by the Lytle Creek Community Center, which is highly unusual proposition, but we don't even have a key to it anymore. We would like to use it for emergency operations. We have budgeted 5 figures for the provision of 2,500-gallon water tanks with associated gasoline-powered pumps that we would maintain and are maintaining. In fact, such a tank and pump is on my vacant lot in Lytle Creek. However, we have the problem that it is unclear as to whether or not the San Bernardino County Fire Department will actually use any of the water we provide. Given that we're all on wells, there's essentially nothing resembling a city fire hydrant. That means that if water that's to be used for fire suppression has to come from creeks or tanks or something that's not pressurized. Unfortunately, it appears to be the doctrine of the San Bernardino County Fire Department not to, as they say, draft water. So they bring up trucks with 500 gallons of water on board, and they are not prepared to use the water we have at hand. Some fire people that we've talked to, members of the department, say, oh, well, we will do that. I know for a fact that all the Type 1 engines that they send up are not equipped with the suction hoses required to use the water we have available. We would do much more to protect our community by way of fuels reduction. And by the way, 3 years ago, I was the lead on behalf of the fire department in getting my neighbors to cooperate with the fuels reduction effort. We'd be happy to do that if the county provided us with a way of getting the debris out. We would be happy to train people to do what they could by way of trying to suppress fire when it broke out. And in fact, last year, we saved a house from burning down by the simple device of all the neighbors showing up with fire extinguishers and garden hoses. And we had the fire knocked down and under control before the fire department arrived. All politics is local. What sometimes seems to be indifference and on rare occasions outright hostility of the various county agencies to our efforts to mitigate our own problems, an effort to reduce, to change that would be greatly appreciated. Is it something, Commissioner Lara, that your agency can have anything to do with?
I mean, it's certainly something we can work with our county leaders in terms of, I don't know if you want to.
Yeah. Mr. Hutchings, I appreciate your comments tonight. I know it's an ongoing conversation we're having with the community. Speaking of just how local it can get, if you will turn around, I would like to introduce you to our brand new county fire chief, Dan Muncy, who I know would want to engage with you about these issues. The issues that you've raised aren't really within the commissioner's purview. They really are county and community issues, and we're happy to continue to work with you on those, a little outside of the scope of the insurance topic that we had here tonight. But I know Chief Muncy would be eager to chat with you about that.
Very good.
Thank you for being here tonight. We appreciate it. That's everyone who's signed up to speak this meeting, Commissioner. I don't know if you're interested in seeing if there's anybody in the audience who has any other questions. Did anybody else come tonight who'd like to make a comment or ask a question? All right, we've got one right down here in the front. If you, when you get the microphone, introduce yourself to us, please.
Hello, my name is Griff Boyster, 35-year resident of Lake Arrowhead. My mom started the insurance business 35 years ago. I'm a broker, lowly broker. And I just wanted, from my perspective, where I'm coming from is last year at this time is when it started. California Fair Plan had a rate increase. All of a sudden, all my companies, I'm a broker. We were only able to write through a couple companies anyway. Most of the companies have been off the mountain for 15, 20 years. So by telling companies they have to stay with the policies is actually sort of persecuting the companies that were willing to stay here. You know, all the other companies, Allstate, all the Farmers and Travelers were about the only companies left, and now you're persecuting them because they stayed. AAA, you name it, nobody would write up here. Okay, so for the last year, I've been behind 3 monitors, rewriting every single, 1,500 policies by times 2 to try to make our clients happy, and then no one's happy. To be frank, I wish this happened last year because, like I said, I have had to hire 3 new people just to keep up. That doesn't mean I'm making more money.
Right.
And as a broker, I want to stay the family business. I want to save my family business. And so as far as what you have to do is get the insurers back in. Bringing California Fair Plan is just, I don't think that's the way to go. Personally, I'm just a lowly little broker, little family broker.
I agree with
and,
you. I agree with you. It's the only option.
And also I'm telling you, like in February, I don't have anybody that's going to be maybe 2 or 3 clients that potentially could be canceled, but 40% of our business was non-admitted anyway. So the people at Farmers used to send us the business because they didn't want to do it. And then 5 years ago, they decided, well, they're going to do it as well, the non-admitted. So by doing what you're doing right now is actually, for us, is actually hurting the people that stayed here for as long as they could. Farmers and Travelers, foremost. Those 3 companies stuck it out. They stuck it out. And the other companies left years ago. They wouldn't have written up here years ago. And but anyway, I just want people to know that I've been working my butt off for my clients and trying to keep their, as low as I can. And a lot of times they reflect on me. What the hell's going on? You read things in the newspaper. And I guess the question I'm asking you now is, tomorrow I'm going to get phone calls. What do I tell them? The Travelers foremost, the admitted carriers. What do I tell them? Do I tell them just don't wait?
You're going to get phone calls saying what?
That I don't need a California Fair Plan anymore. My policy is going to come up in January and February. Because after that, I've already renewed we had to rewrite all the policies after, because that's when they all started canceling or non-renewing, was in January, February. So I'm going to get a phone call tomorrow from somebody from...
If they're in those zip codes, they cannot non-renew.
Okay.
We have a year.
Starting yesterday or today?
Starting as soon as the governor announced the fire risk emergency area.
Tony Signorelli with the Department of Insurance. Depending on which fire created the zip code zones that the particular person lives in, will dictate.
We have a list. Do we have a list of those?
We have a list, and there's 3 different declarations. One was on October 10th, one was October 25th, one was October 27th. So depending on which fire fell within those declarations, it'll be 1 year from one of those 3 dates. So
I don't.
Right, it'll be 1 year from October.
Okay, so we should stop writing California Fair Plan for the admitted carriers. Because they've already got their non-renews. You know what I mean? And I'm always, we have to jump right on top of them.
Well, why don't we have Phil, who's here from the California Fair Plan? Do you want to help answer that, Phil?
Well, that specifically, why don't you, I'll give you my information and we can take a look at the exact scenario. And I think just generally speaking, like you said, started about a year ago. This has been a very difficult year for us all and challenging. And that's where, I can say since around the first week of December last year, I've been on the phone all day, every day with customers, trying to help give them counsel around options, educating brokers, educating agents. And it's caught most of the people by surprise, and it's been a journey, and I think we're definitely more informed. I think from the Fair Plan standpoint, we've been working very hard. We've been out in the communities. We're very active with the California Fire Safe Council and the FireWise organizations and other civic groups, just trying to be involved and hear the messages, as well as the commissioners included us on his tour. And again, I really think the leadership from the commissioner and his team has been phenomenal. They've been worked very hard getting out in the community and just genuinely listening, and even some very rural areas that with very small community bases, but still their message is just as important. And we've been right there too, just trying to do the best we can. We're aware of opportunities within our programs, and that's something, on our own, we've been working on discounts and just different ways to enhance our policies to make them more reasonable. We're working on a Fire Safe Council discount, and as well as some other deductible options and extended replacement costs, just some areas for us to improve our policies. The traditional market, what drove a lot of the improvements and discounts and things that are out there today is it was competition. And, that's something that we haven't been in that place. And, if you think of a flood policy or an earthquake policy alone, really our original design was for fire, smoke, and explosions. And those types of things, that's what we're wired to provide. There's different schools of thought, definitely not here to debate the situation, but from my standpoint, from our standpoint, if you look at the fair plan policy is more expensive, obviously, than a typical policy. So clearly a component of liability or other coverages for water damage or would be in the model that we have, the pricing model would be more expensive because we basically have to insure anyone that comes to us for insurance. The only way we can say no is if they have unrepaired damage or conducting basically a criminal operation on their property. So that's definitely a challenge for us because we have to insure everybody and we have to also be in a position to pay our claims. But with that said, I agree with the commissioner. The people that are going to the efforts to harden their homes, the money that's being spent, there should be benefit for that because that person, and that's again why we, like the Fire Safe Council, they really are encouraging that, and they've got a good model for helping communities become more prepared for fires. That's the bottom line. But as far as we're concerned, we're working tirelessly as well, trying to find ways to do better, to ramp up. Obviously, our world's changed. We've increased volume significantly, and on the same token, the brokers that provide our products, we want them to be informed. That's what we're here for every day, as well as our customers. We're open to change. We just want to make sure it's right, and from our standpoint, we feel like that's the direction we're going in.
Thank you.
Thank you for that. I saw a couple hands over here. Dwayne, you have the microphone. Are you? All right.
Thank you for tonight. It's very special. What everybody else has been talking about. All I want to add to it is we're seeing the insurance industry go Google. And they Google your house, you got trees, you're going to burn. They've been watching too much TV. So I see so many people are turned down for insurance, and so much of it is just because of the modern era, not the old-fashioned way. So the old-fashioned way was the local fire agencies helped keep us safe. And also there was a volunteer fire department for a while. But anyway, Google is playing a big part in whether you're safe or not. And my judgment is you in the trees, you're going to burn. They've been watching too much TV. Thank you.
Thank you, Dwayne. Brenda had another comment?
Something I wanted to address that we haven't really discussed here. We've talked about primary owners, residential and to some degree commercial, but something that does affect us in the resort communities are secondary homes and investment properties. Those two categories have been challenged this year quite a bit, and in some communities you're talking more than 50% in that type of residency. That is going to be a major factor for those communities as far as resale values as well as investors. How are we looking at that model to be protected for insurance purposes?
So the conversations that we've had around these type of properties have really been about negligence of creating the appropriate mitigation factors in these communities that are second homes or are investor-owned properties. And in our plan for the community-wide mitigation programs is really strengthening that relationship between the department and the local governments to figure out how do we continue to not only incentivize those property owners to do the right thing if they're not, especially if they don't live in these communities or are investors, and also what are the sticks that we need to provide in terms as a state and local governments to help provide the proper enforcement so that that mitigation actually happens. And so it's part of our discussion. And we've heard in a lot of these resort communities, you hear this, well, my neighbor is not there, or it's an investment property. Who's responsible for making sure that they provide the appropriate mitigation? And so that's conversations we're having with our supervisors and our local governments to figure out how we streamline that and how do we provide the appropriate incentives and the appropriate regulations to make sure and enforcement that those properties are also get mitigated. Hence why a community-wide approach makes more sense for us to lessen the entire community's risk, but those properties have to be in that plan as well. We need to better work together to make sure that those mitigations are happening in those types of properties as well.
Rick?
Yes, Commissioner, in your presentation, you gave a lot of credit there for hardening of individual properties and abatement, things like that. And that's terrific. But in the white paper for your reading pleasure on Christmas, you'll find 21 major fire mitigation and response improvements that have occurred in this larger community in recent history. And the risk of fire in our community today, thanks to these people, is vastly different and much less than it was in the past. I don't know how you can communicate that to the underwriters, but it's something that they really seriously need to know. Thank you.
Thank you. Absolutely right.
And Rhea had a question, and then I think we'll let the commissioner have some closing remarks.
I was just wondering how they are considering how the Edison company has come in and cut down like 50% of the trees in the area. And are they going to be responsible in the future for not paying for fires or what? They're cutting down a lot of trees to mitigate their losses, but it's not helping us any, it seems, except for not having a forest.
Okay, let me.
Rhea, I don't think it's been 50%. I think they've identified
Only on my
trees,
property, okay.
Perhaps on your property.
The other half fell down in the wind.
Oh, right. They have done a great deal of looking at trees that have the potential to cause problems, and they're trying to get those out, both to protect the community as well as to protect them. So they're doing it on a very individualized study basis. There is an Edison representative here if you'd like to talk to her offline afterwards. I don't know if did staff had any.
Sally, we could do it after. No, that's fine.
Go ahead, Jennifer.
Jennifer Cusack with Southern California Edison. So I know that you've engaged with our folks up in Sacramento, and we thank you for that engagement. Southern California Edison has a wildfire mitigation plan, and that is to reduce wildfire risk. So hopefully that plays into all of your decisions, because we are removing 3,600 trees in this mountain alone, along with all of our other efforts, including PSPS. So hopefully that helps.
Thank you.
Great. Well, thank you all for coming tonight. I've appreciated the comments and the questions. Certainly appreciate the commissioner's announcement tonight. I know it will be a great relief to many in our community, and we hope that during that year moratorium, you're able to work on some of the solutions that you've outlined and others that the community or legislature may have. I'd like to turn it over to you for any closing comments, and then we'll wrap up.
Thank you, supervisors. I really appreciate your time and opening your home for this important discussion. Again, this is an issue to highlight. This is a statewide problem. More than half of California's counties are categorized as high risk or, extremely high fire risk. There's around 3.6 million homes and apartments that are at risk in these communities. And so we're gonna continue to work with the legislature, work with the FAIR Plan, and work with our local governments to figure out how we curtail these issues that are unraveling so many of our local economies. And again, I want to just take a moment to thank my staff who have been out here planning this for several days. And we're going to continue to be coming out to the communities. This is not going to be the last time you're seeing us. We're going to continue to track and assess the issues as we move forward to try to curtail this issue that continues to be a growing problem for so many of our communities. And again, just want to thank our local governments. We're going to be back asking you for your help, for your advocacy as we push these policies through the legislature. We want to coordinate with our assembly members or senators and ultimately with the governor to highlight how these changes are essential for us to get back on track, to stabilize the market, to create a place where we can bring the admitted carriers again and create the market competition that we need to continue to have a healthy insurance market here in California. So thank you so much and happy holidays to everybody.
Thank you, sir. Thank you all.